Hello, all of you. I hope you all are doing good. Today we are going to revise accounting standard 12, that is accounting for government grant. There are so many things that here, but mainly, first of all, as you can see that from the name of accounting standard, it talks about accounting of what? Government grant. So when we receive a government grant, how to do the accounting of it? Point number one. They are not talking from the government point of view. They are talking about the person who is receiving the grant from government. So how the receiver is going to recognize in the books of account. Okay. So first we'll discuss what do we mean by government. What do we mean by government grant? There's some small points that item not treated as government grant. A recognition of government grant, government grant refunds, accounting. So there are total 6 types of government grant. I will discuss with you each of them one by one, and then at the end we are going to discuss about the disclosure requirement. So let's first start that here because they're talking about that here to do the accounting of government grant. So we are talking about from the receiver point of view, the person who is going to receive the grant from the government. So how the receiver is going to do the accounting of it that here. Okay, but we should know that here they are talking the government grant. Who is government here? Okay, what do we mean by government grant? So we'll discuss all the small points first, and then we'll come to the accounting part. Okay, now one by one. They say that here, first point is that here now, is the meaning of what here? The government. What do you mean by government? So they say government refers to a government. That government may be a central government. It may be a central government. It might be a state government. Okay. Or it might be local authority as well, like the municipal corporation. Okay. Local authority. So they say that here the government refers to government that here that might be central government, state government, or local authority, or government agencies that here. The government agencies means, for example, that here NABARD. Okay, NABARD. Okay, government agencies and similar bodies, whether local like the municipal corporation, national or international, also that here. So it might be happen that we receive the amount from the international government, okay, or similar international bodies of government like the UN, okay, they will receive them the grant from them. So that also going to cover here. So government is a broad definition here. It's cover the central government, state government, local authority, government agencies that here, okay, at the same time at the international level also. Now this is a government. We're receiving the grant from government. So what do we mean by government grant that here? So they say government grant are assistance, means help by the government in cash or in kind. What do you mean by in cash or in kind? It might be happen government giving us the grant in cash. They're giving some amount to us that here. Or it might be happen they're giving us in kind. What do you mean by kind? That in kind means that here, that for example, they give us the machinery only. They're not giving us the cash. They're giving us in kind. They give us the machinery, furniture, the land. They give us. They're not giving us the amount to purchase those assets. They're giving us directly those assets only. Okay. That in kind. Okay. And then they say that here, to an enterprise for past or future compliance with certain condition. Interesting. This is the government grants or assistance by government in cash or in kind to an enterprise that year for past or future compliance. Obviously, they tell us that here, if we fulfill certain condition that year, then they are going to give us the grant. Now, the condition may be related to past. For example, they will tell us that here. For example, they tell us that here. Now, if we have a profit of let's say 10%, or we have audited financial statement of the last 5 years. I'm just giving an example that here. So those conditions might be related to past. If we fulfill, we can claim the government grant. But certain time it might be happen, the condition might be related to future. So the question will come in your mind, sir, if the conditions are related to future that year. So I'm going to say that here, how to recognize? I'm going to say it might be happen the conditions are related to future. Might be to happen, I'm not able to do fulfill the condition in future. Let me give an example. They say that the government will give us a grant, but they put a condition that for the next 10 years, example, we have to hire to the local peoples only that year. The company is going to hire only to the local people from that particular area that year, okay, to generate employment in that area. So what is, these are the conditions related to future. So I already received the government grant today, suppose, but these are the conditions related to future. It's okay. If I am reasonably certain that I will fulfill the condition, it's okay. But suppose, because it is related to future, but it might be happen that I fail to fulfill the condition in future. If it happens that I fail to fulfill the condition in future that year, if it happens that year, I fail to fulfill the condition in future that year, I have to refund the grant to the government. Okay. So it's okay that year, if you fail to fulfill the condition in future, whatever grant that we receive from the government, we have to refund to them. So we'll discuss about the accounting treatment later on. But what do we mean by government grant? It is an assistance by the government in cash or in kind to an enterprise for past or future compliance. You got the point here? Now, Before I come to the accounting part that here, I want to discuss with you that items which are not treated as government grant. What does it mean that here now? There are certain items which may look like a government grant, but we don't recognize as but we don't call it as a government grant. First, they say that government assistance that cannot be valued. The government assistance that cannot be valued that here. It means that here there are certain type of assistance by government, but we cannot do the valuation of that. Let me give an example that here. Suppose there is a very good reputation of some company, suppose in Chennai, they have a very good reputation in the government department. Like the Infosys, that example I'm giving you. Suppose there are certain document which is going to be processed in the government, in government that year. So when those document comes in government office, they say, wow, Infosys company, very good company, they have a very good reputation. So their file processing, they do it immediately because of the reputation of the company. Now, it is an assistance by the government that year. But can we put some value on it? No. So this is not a government grant. Then they say that here, normal trading transaction. It means that here, there might be transaction with the government. It's a normal commercial transaction. For example, that here, suppose the metro work is going on. So government say that here to some contractor do the construction of these metro bridge in the station, okay, and all that. Okay, so this person is providing the services to the government, and government for that service paying to that particular contractor that year. So what is going to happen? That it's a commercial transaction that year. So we cannot say that no, it's the amount paid by the government, the government grant. No. In return, you're also giving something to them. In government grant, what happens? Government giving us to us, but we are not giving any services to them that way. But here, it's a commercial transaction. It's a give and take. They are giving us to us, and in return, we are giving certain services to them. So this is not a government grant. Okay. When should I recognize a government grant in books of account? They say government grant should be recognized in the books of account only when we are reasonably assured. So what it says that here, we are going to recognize in the books of account then when we are reasonably assured that. What do you mean by reasonably assured that here? That enterprise will comply with the condition attached to them. What does it mean that here? I'm reasonably assured that here, because it might be happen if conditions related to past, no problem. If you fulfill them, no problem. But it might be happen if the conditions are related to future that here now. What is going to happen in that case here? If the conditions are related to future that here now, I'm reasonably assured that here that I will comply, I will fulfill those conditions in future, and the grant will be received. You say, what do you mean by will be received? It means that it might be happen even though I have not received the amount that year of government grant, still I can recognize as a receiver. I will recognize. You will say, why, sir? Because that I am reasonably assured that here, if the conditions are related to future, I will fulfill those conditions and grant will be received. So even that is not yet received, still I can recognize the answer is as a receivable I will recognize. But grant will be received. What does it mean that here grant will be received? It means that here I am reasonably sure. Let me give an example that here. Suppose the same type of grant I have applied so many times in past that year, and every time the government gave me the approve the grant. I say, yeah, I'm confident this time also they will approve the grant. Or I can say that here now they have already approved the grant, but amount is not yet received. So I'm reasonably assured that here I'm going to receive the grant. Okay. So in that case, we can recognize a government grant. But there's one note on that here now. Now, what is note? Now listen carefully. But they say that it might be happen that we receive the amount from the government. That does not mean that here that we have to, that does not mean that here I'm reasonably assured. It might be happen that we receive the amount, but I am not reasonably assured that I am going to fulfill the future condition. We cannot recognize the government grant. Because to recognize as a government grant, both conditions should be satisfied. First, I am reasonably assured that I am to fulfill that condition. Grant will be received. Suppose I receive the amount. Okay, now you say, so now recognize. But if I am not reasonably assured that I am to fulfill the condition in future that year, in that case, what is going to happen that now I cannot recognize a government grant because I am not reasonably assured that I am to fulfill the conditions future. So they say that here now, a receipt of a grant does not automatically confirm the fulfillment of an attached condition. If there is no reasonable assurance of compliance, the grant will be treated as what? Liability that year. So we cannot say that here receipt of a grant means that automatically it will be recognized as grant. No, that does not automatically confirm that the fulfillment of attached condition. If the conditions are related to future, if I am not reasonably assured that here, it cannot be recorded as grant, it will be recorded as what? Liability. So what is the accounting treatment, entry and all that, I will come to that. Okay. Now as I mentioned you that here, the condition might be related to future. Suppose we fail to fulfill the condition. Suppose we fail to fulfill the condition. So what is going to happen if I say suppose we fail to fulfill the condition that here now? what is going to happen that now we have to refund the grant. So when we have to refund the grant, we'll come to the accounting treatment. Okay, but these refund of the government grant will be treated as what? Extraordinary item as per accounting section 5. Remember that. Rarely it might be happening in MCQ. They will give you that here. The refund of the grant. So refund of the government grant will be treated as what? Extraordinary item. Okay. Now I am coming to the part of what? Accounting treatment. There are 6 types of government grant. Each of them I will discuss with you in detail. Now just listen me carefully. The first type of government grant, they say they're related to specific fixed asset, depreciable fixed asset. It means we receive the grant from the government that year for the purpose of what here? Depreciable fixed asset, means for the purpose of furniture, machinery. Okay. Now they say there are 2 options that how we can do the accounting when we receive a government grant for depreciable fixed. They are not giving us the asset. They are giving us the amount to purchase an asset. Okay. Now here, they say grant for specific fixed asset require the enterprise to purchase, construct or to acquire said asset as their primary condition. Okay, now they give us the amount for the purpose of asset. Now there are 2 ways to do the accounting, and I already mentioned that we are not doing accounting in the books of government. We are doing the accounting in the books of entity, those who are receiving the grant. Okay, the first way is that here I can credit to the fixed asset, and second I can credit to deferred government grant. I will tell you the accounting treatment in both the cases, but let me tell you honestly, the net effect will be same in both of them. Let's start one by one. So first, suppose I purchase the fixed asset. So I'm going to pass entry here. First entry, let me pass it. Suppose I pass entry fixed asset. Just give me a minute. Okay. Suppose I pass the entry here, fixed asset account debited by 100. So what entry we have passed here? The fixed asset account debited by 100. And we are going to credit to which account? We are going to credit to bank account by 100. So we pass the entry fixed asset account has been debited by 100 and we are going to credit to bank account. We purchase the fixed asset. Now government say will give you example. They will not give you 100%. Suppose I am saying they give you the 40%. So out of 100 that year, they will give us the 40 suppose. So we receive the government grant. So we receive the amount, the bank account will be debited here. Now we will credit to which account? Fixed asset. So here I am going to credit to which account? Fixed asset. So I am going to fix, we have not sold the asset, but basically net cost, we incurred the first 100 and out of 140 is going to recover from the government. So what is going to happen that now? Is basically we incurred the 60 only. That's why we credited to fixed asset account by 40. So I will come to the what is the refund part. But if I go to my profit and loss account, this is my profit and loss account, this is my balance sheet. So what is going to happen in my P&L account? Okay, in my, first of all, they say charge depreciation on the reduced amount. So this is my balance sheet. Suppose this is my balance sheet. Okay, we got a fixed asset that here. We record a fixed asset 100. Okay, then what happened that here? I received the government grant that year. I reduce the 40. How much is the amount appearing? 60. Then they say charge the depreciation on the 60. Reduce the amount. Suppose hypothetically the rate of depreciation is 10%. So I will reduce the value by 10%, that is 6. In outer column it will appear as 54 and this depreciation will go to P&L account is how much? 6. Okay, this depreciation will go to P&L account how much here? The 6 here. You got the point here? Okay. Now this is how my P&L account balance sheet will look like. Now they say always remember that for the refund that if any condition we fail to fulfill in future, we have to refund the amount. So always remember that whatever entry we have passed at the time of receiving the government grant, just we have to reverse it. So what entry in all the cases, what entry we have passed here, we pass the entry bank account debt to fixed asset, we just have to reverse it. So we are going to pass the entry fixed asset account will be debited and bank account will be credited. You got the point? You just have to reverse it and it is not going to happen always refund. If we fail to fulfill the condition, then only we have to refund the government grant that year. The fixed asset account will be debited and bank account will be credited at the time of refund. We are just reversing the entry of the government grant that we have received if we fail to fulfill the condition. Okay. Now, second way, when we receive the government grant that year, we can credit to deferred government grant. The same I am saying, suppose we receive we purchase the asset, I pass fixed asset account debited here by let's say that here 100. We purchase a fixed asset and I credit it to bank account by 100. So I pass the entry fixed asset account debited by 100 and I credit it to the bank account. We purchase a fixed asset. Now what is going to happen that here now? Then we receive a government grant. So they say suppose I receive the government grant by 40. So bank account debit to deferred government grant. This is the change here. Here what I have done that here we have credited to fixed asset account. What I am doing that here credit to deferred government grant that here. Okay. Now you will say, sir, is there any change in the yes P&L account balance? The presentation style is going to change, but the net effect will be same that here. Let me tell you, P&L balance sheet. But they say, what about this deferred government grant that here we have not credited to the fixed asset account? They say these deferred government grant will appear in liability side, but they say that here whatever amount in the proportion of depreciation we are charging, the same proportion we will transfer the deferred government grant to P&L account. So they say this deferred government grant account will be debited and the P&L account will be credited, not the whole amount over a period of time, whole amount, but gradually every year in the proportion we are charging the depreciation, the amount will transfer in the same proportion will transfer the amount from deferred government grant to P&L. Let's take an example here, so it will be easy for you. Suppose if I say I purchase a fixed asset, so I recorded a fixed asset by 100. You can see that fixed asset. Okay, now I receive a government grant 40. So, but I'm not credited to deferred these fixed assets. So I created deferred government grant. So it will appear on liability side. Deferred government grant. How much here it is? 40 that here. So fixed asset account debited by 100. Deferred government grant credited by how much here? The 40 is that here. Okay. So 100 and this is 40 that here. Okay. Now understand this point. Okay. Now what is going to happen that here? Now when I charge the depreciation that year, but my fixed asset still is appearing at 100 that year. So I'm to charge depreciation on it. Suppose the depreciation is 10%. So here I will say depreciation, let's say 10. So how much it will appear here? 90. And depreciation will go to P&L account. So I will debit to depreciation account, P&L account. Depreciation will go there 10. Correct. But what is the rule that here in the same proportion we are charging depreciation, the balance of deferred government grant should be transferred to P&L. So we are charging 10%. So 10% of these deferred government grant will also go to P&L account. So I have 10% of 40. So it will come 40 multiplied by 10%. It will come how much here? 10. Oh, not sorry. Of 40. So it will come how much here? 4. So deferred government grant will be debited. So I will minus here 4 here. Okay. I will minus here 4. How much it will appear? 36. And it will go to P&L. P&L will be credited. So deferred government grant here credited by 4. This is how we present in this. But if you see the net effect that here, how much is the asset is appearing in here? The 6, the depreciation 6. How much is the net asset here? 54 is appearing after the adjustment of here the government grant and the depreciation. The 54 is the asset and depreciation which is appearing in my P&L account. How much it is appearing? 6. Now understand this here. If I take a net effect here, this 10 we have debited in the form of depreciation to P&L account. And 4 is in the form of deferred government grant. How much is appearing here? The 6. Net effect, see that here. 6. You got a point. Here again, if I say that here, how much is the asset? 90. How much is deferred government grant now? 36. So how much is the net effect? 54. The same is appearing there. These 54 and this 6 that here. See that here. This 6 and this 54. Only the way we are presenting it is different here. Okay. Now, one more thing that if we refund the government grant that year, if suppose we fail to fulfill the condition future, so if we refund the grant, so you will say, sir, so you said that year just you have to reverse the entry of the government grant that we received. Here we pass the entry, bank account we debited and deferred government grant we credited. So you will tell me just reverse the entry, deferred government grant account debited to bank. I agree with you, but it is not necessary at the time of refund we have a same balance that we have deferred government because we credited by deferred government grant 40. Suppose I am refunding the amount after 2 years I failed to fulfill the condition. So I have to refund the grant. When I am refunding 40, I don't have a balance of 40 in that because over a period of 2 years, some amount I have transferred to P&L account. So what about, I cannot do the complete 40 adjustment in deferred government grant in that case. So example, if suppose here in this case, I have transferred 4 years. So how much balance I have in deferred government grant? 36. Now after that I have failed. So I have to refund the 40. But the balance that I have in deferred government grant is 36 only that here. Okay, not to the extent of, to the extent of balance, correct. I have balance of 36. And the balance remaining will go to P&L account and the bank account will be credited by 40. Because it might be happen, na? When I refund the amount later on that, we don't have a sufficient balance deferred government grant. So I cannot do debit to them. Deferred government grant cannot have a debit balance here. Okay. So when I say deferred government grant, it is credited by 40, we transfer 4 from it, and how much balance we have here is the 36. So maximum, if I want to refund it, I can adjust maximum how much? 36 only, and remaining 4 will go to profit and loss account. Simple it is that here. Okay. Now we discuss about the first type of government grant. Now I am coming to the second type of government grant. This is related to a non-depreciable. Or non-depreciable fixed asset means, like example, best example is the land. We receive a government grant, but that is related to fixed asset, but that there is no depreciation on that asset. So grant for a specific Specific fixed asset require the enterprise to purchase, construct, or acquire said asset as a primary condition. So I have three options here. I can credit to fixed asset, credit to capitalism, credit to deferred government if it has certain cost to then defer it one by one. So when I receive the government grant, okay, so what option I have that here when I receive the government grant? First, suppose I purchase the land. So I pass the entry here, land account debited here by 100 and I paid suppose 100, land account debited 100, bank account credited by 100. I receive the government grant 40. So here what I am doing that is I am crediting to the fixed asset account. First off, okay. Then I have the again I purchase the here the land. So land account suppose debit here 100. We are going to credit to the bank account by 100 that here. Okay. Now what is going to happen? Again I receive the government grant. I have the option to credit to capital reserve. So 40 like that. First I'm crediting to fixed asset, then to capital reserve. Then again I purchase the land. So I pass the entry here, land account debit by 100 here and bank account credited by 100 that here. Okay. Now I debited now I receive the government grant. So 40 I will debit and I'm going to credit deferred government. You say why sir? Deferred government grant, why? They say credit to P&L account in the period in which such cost is being incurred. Certain time it might be happen. We receive the government grant, but there are certain costs related to that here that will incur in future. So that will go to suppose P&L account, like the maintenance and all that. So they say they have the option to credit to deferred government grant, and over the period of time when the relevant cost I am to incur, and that will go to my P&L account, these deferred government grant will transfer to P&L account. Okay, so how many options we have? First, we can credit to which account? We can credit to fixed asset, then we can credit to capital reserve also. Or if there are certain costs that we are going to incur in future related to that asset, in that case, deferred government grant can be credited, and when we are going to incur that cost in future, that deferred government grant balance will go to profit and loss account. At the time of refund, we just have to reverse the entry. Here we pass the entry bank account debit to fixed asset, reverse fixed asset account debit to bank account. Not necessarily we have to refund. If we fail to fulfill the condition, then only we have to refund. Okay. Now here we pass the entry bank account debit to capital reserve, but it might be happen I don't have a sufficient balance in capital reserve. I utilize it. So whatever balance we have, maximum that we can adjust it, and remaining we have to adjust in P&L account. So capital reserve account debit, P&L account debit to bank. Now here we pass the entry bank account debit to deferred government grant account. So what is going to happen? Reverse the entry deferred government grant account debit to bank. But if we don't have a sufficient balance in deferred government grant, remaining I am to adjust in P&L account. So deferred government grant, P&L account will be debited for the balance and to bank account. Okay, this is when we receive a government grant for what? Non-depreciable asset. Now third type of the government grant is in the nature of promoter's contribution. What does it mean that here? Government is giving us the grant that here not specifically for one asset. For example, if you want to do the factory setup in some backward area, example that here. Okay, so government say, okay, we will give you, let's say 100 crores. They will give us 100 crore rupees, but that 100 crores when they're giving to us that here, that is not just for the one thing. They might be for asset, that might be for the setup, that might be for the revenue expenditure to give the salary and all that. That is in the nature of promoter's contribution. If it is the combined to set up the business that here, that is in the nature of promoter's contribution, and these promoter contribution where we have to credit to capital reserve account. Okay, so bank account debit to capital reserve account when we receive the government grant. Okay, if suppose we fail to fulfill the condition in future, we have to refund the grant. Same, reverse the entry capital reserve account debit to bank. But if we don't have a sufficient balance in future in capital reserve account, the remaining balance will adjust in profit and loss account. Simple now. Okay. Now this is interesting that here. Now I'm coming to the part that here, the grant which is related to what here? The revenue that here. What does it mean that here? The grant related to the revenue expenditure that here. For example, if I say that here, okay, the government has given us the grant that here. For example, we are distributing the prize to the meritorious student that year. So what is going to happen that year? Now, when they are distributing the what we call them here, suppose we are distributing the prize to the meritorious student that year. The government tells us that we will give you the prize amount to you and then we'll distribute. Okay, no problem. So that the prize I'm giving, or let's say the salary that is certain salary of it happens that year. They say the government said we will give you the salary for your employee, or certain portion of the salary they will give us. Okay, so perfect that here. So let's take an example that here. Suppose what happened, let's say I am here in financial year 25-26 that year. Now, listen me carefully. Now this is my profit and loss account. Now the salary that I am going to pay that here, suppose the salary that here now, I am going to pay, suppose let's say the 30,000 example that here, or 30 lakhs, whatever is that. Government say we will give you 20 lakhs example. So wow, perfect, 20 lakh, give us a 20 lakh that. Okay, so when they give us that here, the salary belongs to this year and the government grant also received this year. Perfect. So what is going to happen? I have two options. I can record as other income, this other income, government grant 20 suppose they are there, or I have the option to deduct this government grant 20 from it. Net effect will be same. Either I can deduct from the salary 20 or I can show another income, but the net effect is same. If I deduct it 30 minus 20, it will come 10. If I don't deduct, if I credit as other income, net effect will be 10 here, 30 debited, 20 credited that here. So either you have to record as other income or deduct from the relevant expense. So they say that here now, grant intended to compensate expense incurred in the past or to be incurred in future. So bank account will be debited, P&L will be credited. But other income, we can show as another income or we can reduce it from the related expense. If refund, reverse the entry. Now here understand the situation before I come to entries that here. Now I am here in 25-26 financial year. Okay. Now what is going to happen? Suppose the government gave me the grant for the next 3 years. Okay, let's say that here. They say per year I am paying the salary 30 lakhs. They say, but they will give us the grant only 20 lakh per year. They gave me for 3 years, 20 lakhs multiplied by 3, that is coming 60 lakhs. So when I receive the government grant, this is my P&L account. Just give me a minute. Okay, this is my P&L account and this is my balance sheet. Okay. Now here 26, 27. This is my P&L account and this is my balance sheet. Okay, now understand this one. What is going to happen that here now? They say that I recorded the salary of this year. Understand this one. Salary of 25-26. I paid how much? 30 lakhs. Government gave me the grant that year. Wow, God, how much grant? They say they give us the for the 3 years. For 1 year is 20. So for 3 years, that is going to come 60 lakhs. Wow, great. So bank account debit to income. You say no, it is not accurate now to record a deferred the government grant is 60 lakh because that is not for the 1 year, that is for the 3 years. So what I will do that here now, I will record here in my balance sheet. I will record deferred government grant. Okay, 60. But for this year belongs to how much here? 20 lakhs. So I will deduct 20 here and 40 will come here and this 20 will be recorded here as other income deduct from them. So here why I am doing that here? Deferred government grant because certain benefit is going to relate to future. If suppose all related to future, I will not credit here. Then I will come to the next year, that 20 financial year 26, 27. Again that year now, salary I paid 30. Now deferred government grant, I have balance of here how much? 40. So I will credit that, I will again transfer the grant of this 20. So balance will come here 20, it will go 20. Then I come to 27, 28 that year. So this is my P&L account and this is my balance sheet. Again, I paid the salary of how much? 30. This is my balance. How much balance we have in deferred government grant now? 20. So transfer 20 or here. It will come 0, here 20 like that. So why we are doing that? Because we received the grant in advance that is related to future expenses. So we cannot take as an income of this particular year because the matching principle is simple. The salary that we have paid 30. How much is the grant related to this 30? 20 that year. That will take 20 only. The next year when I pay the salary 30, how much grant related to this 30? 20. Then next year I give 30. How much grant related to this 20? So in proportional, I will going to take this 20, 20, 20. We cannot take in fund short 60. Okay. Now, if the grant is we have received for the future expenses as well. That is. Okay. Now, what is just let me adjust this. Okay. Now here they say bank account debit, bank account will be debited here and deferred government grant account will be credited here. Okay. Write off to P&L account means transfer to P&L account in the period over related costs are incurred. So I'm related costs incurring 3 years. In 3 years we have to transfer that. Okay. Now the fifth is the in lieu of past period cost or with no corresponding cost to be incurred. Basically it is in the form of compensation that is. Now what happens, certain times the government is giving the grant in the form of compensation because we have incurred some loss, for example, due to COVID-19. So government say, no, we have to get a certain grant because we have incurred so much loss. A flood happened, earthquake happened, anything happened, uncertain thing, something happened that year. The government want to compensate us that year. Okay. So if we receive the grant for that, we are going to pass entry, bank account will be debited and profit and loss account will be credited here. Okay. Now here, this last one is that here now is the non-monetary government grant. Non-monetary means something that we receive. It might be in cash or it might be in kind. The kind is non-monetary, something which we have received in kind. For example, fixed asset. Well, it might be happen. Government is not giving us the cash. Very important. Government, whether the government is giving us the cash, no. Government is not giving us the cash. The government is not giving us the cash here. What they are giving us, they are giving us the asset here. So when they're giving us the asset here, so I'm not going to debit the cash account. They're directly giving me the asset. So it might be happen. They are giving me the asset here at concessional rate. Okay, suppose the asset is of, let's say, the 1 lakh. They are giving me, Zubair, just you have to pay, example, just you have to pay the 60,000. I will say, wow. So I will record this asset as 60,000 because I'm to pay the 60,000. So at concessional rate, they are giving me fixed asset. Okay. Now it might be happen, they are giving me the free of cost. Okay. So I will debit again, fixed asset account will be debited, but I'm not paying, and here I'm paying the amount. Here I'm not paying amount. They are giving me free of cost. So they say any nominal value. For example, 10 rupees only. 10. Okay. Any nominal value, because it should appear in books of account that we have these assets. Okay. So if it is concessional rate, so we will record at concessional rate. Okay. Record at concessional rate. Okay. If it is at free of cost, record at what? Nominal value. Okay. Now here, disclose the requirement for government grant, accounting policy for government grant, including the presentation of method in the statement. It means how we disclose these. Different ways. For example, we can credit to fixed, we can credit deferred government grant. How we have shown them, and details of the nature and extent of recognize the government, including the concessional rate of free of cost. If we have received, we have to recognize. We have to mention them. How we have recorded them. Okay. Then note, when the government grant is received for a specific purpose, it should be utilized for the same. If they have given us the grant for to purchase the PP, we have to utilize for the purpose of PP. We cannot give the dividend out of that amount. Our depreciation on the revised book value should be provided proportionately over the residual useful life as per ASPN also. Whenever we receive and whenever the change in the value of the asset, so that now onwards depreciation will be provided on the residual value. It means the prospective effect we have to give on the new book value. Okay, if we receive the government grant, later on the value is going to be changed, or if we refund the grant, also in that case the value of the PP might be changed that year. So in that case we have to charge the depreciation on the revised value over the remaining useful life of the asset. So this is all about accounting standard 12, that here accounting for the government grant. Now what we'll do that here, now we'll solve a question on accounting for government grant that here. So what question number 34 says that Z Limited purchased a fixed asset for rupees 50 lakh, which has the estimated useful life of 5 years with a salvage value of rupees 5 lakh. So they purchased the asset of rupees 50 lakh, the salvage value is 5 lakh. On purchase of the asset, government granted it a grant for rupees how much? We received a government grant of 10 lakh. Pass the necessary journal entries in the books of the company for the first 2 years if the grant amount is deducted. Now please listen, deducted. It's a first item. We have to find it out which type of government grant. The first for the depreciable fixed asset, and they have deducted from the cost of the PP that year. Okay. So first we purchase the asset, we are going to pass entry, fixed asset will be account debited and bank account debited 50 lakhs. Then we receive a grant. So bank account will be debited and fixed asset account will be credited 10 lakh. Then we charge a depreciation. So when we charge a depreciation that year, fixed asset is of rupees 50 lakh. We receive a government grant how much here of no. First of all is that when we charge the depreciation that year, when we charge a depreciation, remember that. Okay. So 50 lakh is the amount of the asset. Okay. Now we receive a government grant of 10 lakh. But this is important that we also have to deduct the scrap value or residual value. It is mentioned question that is 5 lakh. Okay. Because when we calculate the depreciation, so life is how many years? The 5 years. The amount will come 7 lakh. Okay. So here, so amount depreciation account debited here, fixed asset account credit how much? 7 lakh. This depreciation will go to P&L account. So P&L account debit to depreciation. Same will happen now in second year. So for how many years they ask you? For the first 2 years only. Okay. So now second year we have not received any grant and we have not purchased asset, but we are going to charge depreciation. So depreciation account will be debited here. Fixed asset credit, and it will go to P&L account. P&L account will be debited and depreciation account will be credited here. Okay. Now here it says that if Z Limited purchased a fixed asset for rupees how much here? The 50 lakh, which has the estimated useful life of how many years? 5 years, and salvage value is 5 lakh. On purchase of the asset, government granted it a grant for rupees how much here? 10 lakh. So we received again 10 lakh. pass the necessary journal entries in the books of the company for the first 2 years only if the grant is treated as what? Deferred income. It means they have not credited to asset account, they have credited deferred income. So how much will it be the amount of depreciation here? How much is the amount of the asset? That is a 50 lakh here. Okay. How much is the residual value? The 5 lakh. You'll say, no, sir, government grant also the 10 lakh. But the 10 lakh they have credited to deferred government grant. So here 50 lakh minus 5, that is the residual value divided by 5. That will come 10 lakh. So first we purchase the asset, fixed asset account debit to bank account. No. It will just 1 minute. That is why it is coming residual. 5 is that if, but they have calculated. Okay, wait. Residual value, salvage value is 5 lakh only. Fixed asset on SLM basis that here now. Oh, 45. Okay, here I am. Just 1 minute, sorry. Correct. Here it should be 5. Correct. Okay. Now 50 lakhs minus 5 lakh, there is residual divided 45 divided by 5, that will become 9 lakh. So fixed asset, first we purchase asset, fixed asset account debit to bank 50 lakh. Then we receive a grant. So we pass entry bank account debit to deferred government grant 10 lakh. Okay. Now we charge depreciation. So asset is appearing at 50 minus the residual value when we calculate depreciation. We don't do deduction of residual value in balance sheet, but while we calculate the amount of depreciation, at that time we deduct. So depreciation account debit to fixed asset account 50 lakh minus the 5 lakh, that is the residual value. It is coming. This is 9 lakh. Now the depreciation will go to P&L. So P&L account debit to depreciation account 9 lakh. Now in the same proportion, here we are charging depreciation over a period of how many years? 5 years. So that deferred government grant will also go to P&L account in 5 years. So deferred government grant account debit to P&L account. We are transferring the balance of deferred government to P&L account. So 10 lakh is the amount of grant divided by 5. So that will go, 2 lakh will go to profit and loss account. Second year, again we will charge depreciation, same amount. Depreciation account debit to fixed asset. Depreciation will go to P&L. So P&L account debit to depreciation. Now again the balance of deferred government grant will transfer to P&L account the same proportion. That is a 2 lakh. Okay. Now it says that here now. Next question. Surya Limited received a grant of rupees 2,500 lakhs during the accounting year 2021 from the government for the welfare activity to be carried on by the company for its employee. Now the grant prescribed condition for its utilization. However, during the year 21-22, it was found that the condition of the grant were not complied with and the grant had to be refunded to the government. Okay, they are saying the accounting treatment of the refund. First of all, that we receive the government grant related to the welfare. So that is related to revenue. So when we receive the government grant, so we credit to P&L account as another income or deduct from the relevant expense. Or if the expense is going to incur in future, then we have to credit to deferred government grant. But here we are talking about the refund of the government grant, but because we failed to fulfill certain condition. So we have to reverse the entry. If we have some balance in deferred government grant, we'll adjust there, or the remaining will go to P&L account and then we'll credit to bank account. Okay. The first will adjust in deferred government grant and the balance in P&L and will credit to the bank account. Okay. Now 37. They say that here now, Santosh Limited that has received a grant of rupees 8 crore from the government for setting up a factory in a backward area. Now, out of this grant, the company distributed rupees 2 crore as a dividend. So they received the amount to set up the factory. But what they have done, they distribute as a dividend. Can they do that? No. It should be used. I mentioned you that, It should be used for, where's the book? Just give me a minute. Okay. It should be used for the purpose of what? Okay. It should be used specific. It should be used for the same purpose. That's why they say that here now. But they receive for the purpose of factory, but they are distributing dividend. It is wrong treatment. So it should be the specific purpose. It should be utilized for the same purpose. So wrong treatment that they have given. Also, Santosh Limited receive a land free of cost. So they have to record a nominal value like rupees 10, 20, 30, whatever. From the state government, but it has not recorded it at all in the books as no money has been spent. Still, we have to record it in the books of account. Obviously, we will not credit to bank account. We will credit to P&L because we are not paying any amount. So what is the treatment? Free of cost, it should be recorded at nominal value like rupees 10, 20, 30. Okay. Now next question, 38. Company X runs a charitable hospital. It incurs a salary of doctors, staff, etc. to the extent of rupees how much? 30 lakhs is the amount of salary per annum. As we support the government, local government gave a lump sum of 90 lakhs to meet the salary for the next 5 years. Now understand that here. Same example we discussed here. The 90 lakhs that we receive for 5 years. 90 lakhs that we receive for how many years? For 5 years. Okay, 90 lakhs that we receive for how many years? 5 years. So how much? 90 divided by 5, that is going to come how much here? Oh, 18, not, okay, 18 lakhs. So how much we have to take every year in P&L? 18 only, okay? So you are required to pass the necessary journal entry in the books of the company for the first year if the grant is shown separately, another deduct from the, okay, no problem. But, okay, first we have to, how much we will take to P&L. First we receive the grant. So we pass entry bank account debit to deferred government grant or deferred income account, same thing. Now, salary we paid 30 lakhs. So salary account debit to bank account 30 lakhs. Okay. But the balance of deferred government will take it to P&L account. In the same, this deferred government grant is for 5 years. So 90 lakh divided by 5, that will come 18 lakhs. So deferred government grant account will be debited to P&L in the form of other income. But they say that here, if you either you will credit to P&L account the same here, or you can adjust from the relevant expense. So what I will do that here now, instead of recording the other income, I will deduct from the cost of the expense. Okay. So from the expense, relevant expense. So I will credit to here expense account. So basically we are deducting from the expense. Here we are showing as other income. Okay. But only 18 lakh because this grant of 90 lakh that we received for how many years? 5 years. Okay. So how it will show in P&L account? First case other income. And in another case 30 minus 18, 12. But effect is same in both the cases that here. Okay. But you are showing as other income that here. Okay. So on debit side will record 30. The net effect will be 12 only. Here you are showing as a deduction. Now, question number 39. This is the Primus Hospital Limited had acquired 40 units of Doppler scan machine from the Hollywood USA at a cost of $165,100 per unit. So how many units we purchased? 40 units. At what price? Per unit? Per unit at 1,65,100 per unit. Okay. Now, they say in the beginning of the financial year 8-9, the prevailing rate of the exchange rate at that time was 50 per dollar. So I will multiply that here with 50. Why? $1 is equal to 50. This is the amount of dollars. Okay. For 1 unit. 40 units multiply by this amount because this per unit. Multiply by the exchange rate. Okay. The acquisition was partly funded out of a government grant of 5 years. So we receive a government grant of how much? 5 crore. The grant related to such machine was given to with a rider that in the event of a change in management, the entity is bound to return the grant. So they put a condition. If they change the management, they are liable to refund the grant. This is the condition. Okay. In April 2011, it means the grant received in the beginning of 2008-9. So 8-9, 10-10-11. After 3. Sorry. Okay. After 3 years, they have to refund the grant, okay, because they failed to fulfill certain condition. Now, 51% of the control of the company was taken over by an overseas investor. The expected productive period of such asset is normally the 5 years. Okay, so 5 years the life of the asset. After 3 years, we fail to fulfill the condition, we have to refund the grant. Okay, the depreciation rate adopted 20% per annum on SLM basis. The company had incurred expenditure of $4,000 towards the bank charges. So understand that here. So bank charges $4,000. We have to capitalize that here. Okay, related to this PP only it is. Okay. Now what is going to happen that now this $4,000 is not per unit. Remember, complete 4,000. So we just have to multiply by is $4,000. Wait, we just have to multiply the $4,000 multiply by rupees 50. Don't multiply by 40 because this is not for per unit, the complete amount. And rupees 7,500 per unit. Remember the 7,500 is in rupees per unit as a sea freight. So 7,000 rupees it is. Okay, 500. I will multiply by 40 units that here. We'll say why not exchange rate because this is already in rupees. Okay, why multiply by 40 because this is per unit. Okay, simple. Now you are also informed that neither the capital reserve nor deferred income account has been maintained by the company. Basically, they're telling us we have credited to fixed asset account because they say capital reserve basically we do in the case of land. Anyhow, we cannot do that. It's a depreciable asset, but we have the option deferred government grant, but they have not created deferred government grant. They credit to fixed it. Simple accounting treatment. Now first one by one, 40 multiplied by 1,65,100 multiplied by 50. This coming this much 33 crore 2 lakh. Then 4,000 multiplied by 50 that will come 2 lakh. Now 40 multiplied by 7,500, that will come 3 lakh. If we do the total here, this much amount will come. Now what we have to do, that we have to deduct the government grant of how much here? The 5 crore that here. Okay. We reduce the cost of the asset. This much amount is coming, but we use it for 3 years. So we have to charge the depreciation for 3 years. So if I say that how much is the cost is the after the government grant, it is coming, wait, 28 crore 7 lakh. This is for 5 years. So how much will be for 3 years? Okay. So 28 crore 7 lakh divided by 5 multiplied by 3. That is coming here 16 crore 84 lakh 20,000, and this is the WDV after 3 years we have. Now we refund the grant. Okay, so we'll add back in this amount. So this basically you have to add back. This is the revised value. And what AS10 says, and AS12 also mentioned that here. Now this amount will be depreciated over a period of 2 years that here. And again, refund is an extraordinary item. Okay. So if you remember, the relevance of the AS5 is also that. So if it is extraordinary item, we have to mention such a way the impact on the current year profit loss can be seen that here. So I will say normally I have charged depreciation that here 28 crore 7 lakh divided by 50. For 1 year I am charging 5 crore 61 lakh 40,000. Okay. Now I will charge depreciation here 16 crore 22 lakh 80,000 that here, divided by 2 years only. I am charging now 8 crore 11 lakh 40,000. So I am charging more amount of depreciation. So 5 crore 61 lakh 40,000. So I am charging how much more depreciation? I am charging 2 crore 50 lakhs. Okay. So this is the depreciation. Now I will charge this much depreciation. Under the previous we have this much depreciation we have to charge. The additional depreciation this much we are charging in the next 2 years. So my profit is going to be impacted by 2 crore 50 lakhs. Okay. So this is all about accounting standard 12. Okay. If you want to say anything, you can drop a message, comment here in comment section that here now. I hope you all are enjoying these revision series on accounting standard that. Okay. Anything you want to say, you can comment section. That is for today. Take care all of you. Bye bye.